And we are live. Good morning. Welcome. Happy Friday. Flex those muscles. Let's get excited. Let's wake up. Let's do that. It's 8:01, May 20th, 2016. This is our Zoom in between Wall and Main with our special guest, none other than Christopher Ragain. Chris, thanks so much for being with us today.
Great to be here. Great to be here.
And good morning, Dennis. Good morning, Sarah. We'll no doubt have some other people joining in. For those of you who have joined in and who have your video off, if you want to appear here, you got to turn the camera on. You got to be in it to win it. That's the bottom line, right? Isn't that what they say?
Yep, got to spend money to make money.
Yeah, so you got to sort of spend that video streaming footage in order to receive the benefits of being online with us and being in the panel and being seen. Don't make a scene, but be seen. So, Chris, I'm really happy to have you with us. I've wanted to do this, as I told you, ahead of time for a long time. I felt it was long overdue. The response we got in terms of the registrations for this is indicative of how many people are really interested in learning more about your product, probably because they want to use your product. And so I'm excited to get this going. First, let's start with a little background. Tell us a little bit about who you are, what you do, who you do it for, why you created Tax Planner Pro. Obviously, you saw a void that needed to be filled. So give us the backstory.
So my day job, right, is as an accountant and as a CPA, I run a firm called Ragain Financial. And like most of you that are watching this, 95% of my time is spent with clients. We do bookkeeping, tax returns, payroll. And one of the pieces of my practice that's a little bit unique, maybe, and I like to talk about these things that make our practices unique because I think they're great selling points and ways to market our practices. I serve only business owners, only. So if someone with that needs a 1040 comes in my door, I cannot do your work. If you've got a trust or a nonprofit or any other kind of tax return need or accounting need, we can't do it. We only work for small business owners with revenue between $0 and $4 million. And we offer packages to those folks to incorporate our services in their bookkeeping, tax returns, payroll, tax planning. And so what we're going to be talking about here today is a lot about tax planning. I developed a software that is on the Intuit App Store, and as of about 48 hours ago on the Xero App Store. So if you use Xero, we are a Xero certified partner as well. And it is a software meant to change the game when it comes to tax planning. It's meant to open up a new world for our clients where we are more focused on tax planning than many other things. And, what's unique about me maybe is that I am walking in your shoes. So I'm doing this every day like you guys are, and I decided to hire developers and make something, and I depend very much on the relationships that I have with other accountants to help me mold this software into what it needs to be. So that's a little bit of backstory.
Right. So first there's a question coming in already. So do you do 1040s for the small business owners whose business tax returns you do? I assume you do. That would just come naturally.
We do. So that's confusing, and I didn't explain that very well. We do 1040s, but only for the business owners that are part of our service and also own a business. Right. If you own rental properties, you would qualify as a business owner. But we have, we probably get 20 to 25 1040 requests every single tax year, new clients wanting to come in, and it's painful having to turn that business away, but we do it because if you don't stick to your niche, it's not going to work.
Yep, I've certainly learned that the hard way a couple of times.
Me too. That's from the school of hard knocks for me.
Yeah, because then you get, and I know a lot of CPAs and enrolled agents who function the same way. They will only handle businesses, and then of course they're going to do the personal returns for those businesses. Yeah. That only makes sense. It would be kind of crazy to say, no, we're not going to look at your personal stuff, even though it's an integral part of your whole picture.
Oh yeah, I couldn't do that. And in fact, there's I've often had ideas where I could start a second business that was just about 1040s and didn't do business stuff. And I have a whole bunch of ideas of how I would do that with financial planning and investments and like a whole menu of services. But I have my hands full already, and my wife would not be pleased with that. So I'm gonna not do that.
Right. And it's interesting because first of all, going back to what you said, when you have to turn the 1040 people away, the ones who are strictly 1040, just tell them to just go start a business.
Yeah, right. That's what I tell them. I say, just go start a shell business, even if it's a lie. Right. And I'm kidding. I don't say that. That'd be terrible.
It would be funny though. I would say it just to get them to laugh, and then somebody would end up taking me seriously and go start a business. That would be a good thing. Maybe.
They would. They totally would. They'd be like, "Well, Chris, what kind of business should I start then?"
Whatever it takes, right? Look, we're moving into the gig economy, where that's how a lot of people are functioning, right?
Yeah.
The new what do you call it? The new business. The new job is for the unemployed, right? Or the new business owner is the unemployed, where they're picking up gigs here and there. I'm curious, are you seeing a bit of that in your own practice? Are you seeing people come in who have just 5 or 6 different gigs, and they have a business doing, they're driving for Uber, and then they're waiting tables, and then they're doing 6 other things?
Maybe I do. So we have a new marketing campaign that we're rolling out on Facebook that's actually targeting this group, because you can really reach them on Facebook.
So you define Schedule C's as business owners then?
Oh, sure.
Okay. And I was thinking like sub S's and,
Yeah, no, any kind of business. So if you're self-employed in any way, you get into my wheelhouse.
Oh, okay.
And if they make enough money, I may recommend that they change structures in some way. But we have several folks, and this gig economy group is one that we really target, because they're not making so much that they need to be in this big 1120S kind of thing.
Right.
But what my packages are all geared towards that kind of scenario. So what I'm having to do is create new packages that are specific to what you were talking about, Seth, where I've got a gig package where you can have multiple Schedule C needs, and we can still include it, and the pricing is the right fit, because you may not want to pay me $12,000 a year to do this stuff, right? So we're rolling something like that out that's scheduled to really go live in July for Ragain Financial, and we're going to see how it goes. I can tell you the pricing is aggressive with it, and the idea being that I can find other services to sell to them or to provide them once they get into my ecosystem. So at Ragain Financial, we do financial planning, we do debt counseling, we do investment advisory work. We manage about $40 million for clients. So one of my strategies is if I can just get somebody into my ecosystem, I can make money from that, not necessarily directly through, hey, I need to charge you $300 a month for accounting fees.
Right. And all right, so let's, first of all, quick question on that. When you talk to these people and they're coming in with a Schedule C, do you end up suggesting to them that they form a legal entity of any sort, or do you think they're fine as sole proprietor?
I'm not a big fan of sole proprietorships, like naked sole proprietorships. I've seen, and especially depending on what kind of work they're doing. So if they're doing something that's kind of structured through another entity, and I'll give you a great example, like if you are an Avon rep, let's say, and you're just starting out and you're doing a lot of your billings through Avon, and Avon is dropping you that income after they've skimmed it, then I may let you do that for a little while, because I don't want to cost you a bunch of money. But if you're out there washing trucks, right, or washing boats, and you're just naked out there with no liability coverage at all, I will have you go down that road.
Right.
When you say naked, you mean, say, for example, if you're an LLC, doing sole prop, that would not be.
Well, no, I wouldn't call that naked. Although I hate single member LLCs, because I think the limited liability shield is easier to pierce than if you were multi-member LLC. But I'm talking about someone who's gone out there and said, it's Chris Ragain. You're going to cut a check to Chris Ragain because I washed your boat. And then it turned out that I I didn't do something right, and when you turned your boat on, the blower wasn't on, and it blew up and killed everybody. And then I have a problem. And that's not just a story that I came up with off the top of my head. That really happened to somebody. And it was a terrible thing. And I learned a very good lesson. I wasn't their accountant, but I learned a very good lesson about what can happen to you with naked sole proprietorships.
Yeah, I mean, over the years, I have learned to always recommend an S Corp unless it's real estate that you own, because you don't want real estate in a corporation. That needs to be in an LLC.
So that is exactly my position as well. So since we both agree on it, people who are watching this can take that as law. We're offering that recommendation under the do not sue clause of my company, but you can take it as Seth's recommendation.
We'll call it Seth and Chris's law of legal entities to set up. But the disclaimer here is always, all this information is for educational purposes only. Always seek the guidance of a professional before making any decisions. And I will deny and disavow any knowledge of anything you heard me say here today.
That's right. We can delete this video just as fast.
Right. I can pull it off of YouTube in a second.
No, but it's good advice. It's good advice.
Let's shift gears a little bit. Let's talk about the bookkeeper, because I know that you have said, that bookkeepers are really more important to tax planning than the accountants themselves. So let's talk about that. Why is that?
I mean, this is like when I go into a tax discussion with tax accountants, I say this because it's really controversial and they get like really angry. Like, what are you talking about? Bookkeepers. And I'm saying, here's where I'm coming from with this. When it comes to tax planning, most business owner tax plan ideas are going to somehow be a derivative of the business. And bookkeepers and accountants, I hate using the word bookkeeper. I'm going to use the word financial accountant maybe, because it depends on what kind of role you're playing. But whoever has ownership of these financial statements.
Whoever's compiling the books.
Yes. They know so much more than a person who sees the tax return once a year. Mm-hmm. And I don't know why more people aren't talking about this, that if you try and do tax planning, which is the only way to save clients money, period. It does not happen during tax season. Why are we not making it a collaboration between financial accountant and tax accountant? Why are we not doing that? Why are we saying, well, if you need to do tax planning, you've got to go to your tax guy. I'm the financial person. As someone who does financial accounting and is a bookkeeper, I'm saying our profession has to stop saying that. And I'm also saying that as a tax accountant, we have to stop believing that we are the only folks who can touch anything tax. That's not correct.
Right.
Right? I mean, the bookkeeper, financial accountant is making so many decisions every day about taxes, how we categorize things, how we move things between the income statement and the balance sheet. Are we capitalizing it? Are we expensing it? What are we doing? And so my goal, as you can see, I get a little passionate about it. I'm like, got to talk about tax planning and bookkeeping. I'm trying to change the way the industry thinks about it slowly but surely by saying, let's make this a group effort. Because as a bookkeeper, you know what I'm asked more than anything as it comes to October, November, December? Not as a tax accountant, as a bookkeeper. You know what I'm asked?
Let me guess. Where'd all my money go? Even though I made all this money, where is it? Why isn't it in the bank?
What do you think the taxes are going to be?
Right.
You know what? How am I looking? They don't call the tax accountant for that. Yeah. They talk to the person they talk to every day. So our discussion here today is going to be somewhat about how I've developed this software so that bookkeepers and accountants, tax accountants, can kind of come together around it. Mm-hmm. And say, this is where we're both going to provide input to this system so that our clients start saving money rather than coming to all of us at the end of the year. Right. Saying, I wish you would have told me. I wish you would have done something about this.
I think you could argue that with the software, the way it's evolving with, zero data entry, that you have to have a higher level of knowledge of accounting as a bookkeeper just to be able to survive in this transition, because people that are strictly data entry persons probably not going to survive.
Well, I agree with that. And Seth and I both have talked in blogs and videos and lots of different things about the evolution of the bookkeeper. And one of the things, when I first started, I worked for KPMG and Arthur Andersen before I went out on my own. And I never noticed for probably the first 5 or 6 years of my career, any kind of stereotypes people place between bookkeepers or tax accountants or what, because I didn't really know. I just knew we were all trying to do this work. I didn't know any better. What I've learned is that it is extremely difficult to be a financial accountant in this environment. If you wanted to compare what changes a financial accountant has had to make versus what a tax accountant has had to make, the financial accountant has had to evolve 10 times more than the tax accountant. Look, I use Drake software, okay, as my tax software. Drake software hasn't changed the way it's looked or functioned for 12 years. It looks the exact same way that it looked back when I started out on my own. Then take a look at QuickBooks and Xero and all of these options and what financial accountants have to actually learn what to do and how to do it. I mean, it is a world that changes every other day. So I have a lot of respect for that side of our business. Now, I do both sides. So I'm not in a situation where I'm doing financial accounting on one side and sending it out for tax on the other. But I also respect that relationship. And we're trying to make sure that it works inside Tax Planner Pro, whether you have 2 separate groups doing it or whether it's all in one house. But it's time we start looking at this ecosystem of client, financial accountant, tax accountant saying, well, what are we all going to coalesce around? Well, it's got to be tax planning probably. It's the one thing where we're all very much needed.
So I want to talk about something that you addressed, a couple minutes ago, and then we're going to get into the next logical part of this discussion, which I think goes back to what Yvette was asking about before we actually went live. But so you talked about the sort of role of the bookkeeper or the financial accountant being, in a sense, almost more important than the tax professional in the tax planning process, and I agree. One of the things that I've been saying for years, and it's funny, somebody pointed out to me that I've been, Jen Haugo from ICB USA, recently had pointed out to me, she's like, Seth, you're so consistent, because she pointed out that she was watching some of my videos from years ago where I was already saying, that as the financial accountant, what we need to be doing after we reconcile all the statements and compile the books is reviewing that balance sheet line by line and then going through the P&L. And where I learned that from, and the reason I've been saying it for years, is because I got that from when I was working at a CPA firm and I was the in charge on audits that we did. And when I kind of took a step back and looked at the big picture of what the process was, when I looked at the testing that we had to do according to the CCH guides, it was then I found out that there was actually a term for this in the industry among CPAs, which is we beat the hell out of the balance sheet and then we go through the profit and loss, right? So I said, why not perform that as an internal audit process? We don't have to do it as formally. I'm not going to send confirmations to banks, but I can certainly confirm that the reconciliations are accurate, that the reconciled balance agrees to the statement balance as of the end of each month, right? And I can then run an uncleared transactions report on those accounts to make sure I don't have any old stuff that's not cleared that needs to be reversed off the books. And I can go through the receivables. And what I also learned is that when I did this on my own, I ended up with a long list of questions that had to be sent to the client, and good luck getting a response, right? Or good luck getting it timely, or you get it piecemealed, and it takes 6 months to actually clear up all the stuff I came up with. So what did I learn? I take a product like the one we're using right in this moment, like Zoom, and I say, hey, client, come join with me. Let's do this together, because now in 10 seconds you can look at your AR aging report and tell me if it looks right, or explain why there's negative numbers on it, because either somebody made a deposit and you just took a payment and booked it to accounts receivable rather than booking it as a liability as appropriate, or you actually have a payment that's not married to an invoice and we have to figure out what happened there, right? And how many times do we see situations like that where then we figure out that, because the client says to me, and I would never know this myself, the client says, oh no, I know that client, they definitely paid. Great. Well, then now that I know that the accounts are reconciled to the penny without exception, I can rely absolutely on the fact that that payment is there. I do a search for the amount, and it shows up in a deposit somewhere booked straight to income, which means we've duplicated income. But now it's an easy fix because I can swap out that deposit with the payment on the invoice, and boom, problem solved. So the point is, by going through this, we provide tremendous value to the client. And now I can sit down with you, Chris, and say, Chris, I've been through these books. You know how thorough I am going through them. Now I'm going to give you something solid that you can actually do the real tax planning with.
Yeah.
And that brings us up, I think, to the next piece, which is...
Can I add something to that real quick?
Please.
So we do something, it sounds like we've stolen your idea in my house. and the only thing I was going to add is we call this the financial review board. Mm-hmm. And what we do is we do exactly what you're talking about, and we tell clients that twice a year their financials go before our financial review board. We don't have time to do this for them every month. We've got a whole bunch of them, and they're not the same kind of bookkeeping as if you were doing something for a huge company where you could do it every month. But we say you're going before the financial review board. We're going to review everything, then we're going to submit to you a report, and we want to meet with you about the report. So it is a good idea, and clients love it. They love it.
It provides so much value. I mean, I've told the story a million times already where I had a client who was balking about the monthly fee that I wanted to charge him, and I went through this process with him, and by the end of it, I didn't have to bring up the rate anymore. He said, Seth, I'm good with the price you want to charge. It was just clear that he saw the value as a result specifically of that process of going through the financials with him. And then there were simple things he got to give his input on where I didn't care from a classification standpoint, but I was putting the printing, he was a real estate agent, and I was putting his printing costs in a printing account, and he said, no, I want to stick that in advertising because that was for signs I printed to to put outside the home that I had listed for my showing on Sunday.
But clients love it. Clients love it. It's a great piece of a service.
Yep, and now they understand what they're looking at when they look at their financials, and especially because I've engaged them in the process, which means they've had specific input about what that picture looks like that we're trying to paint of what the financial position of their company is.
That's right.
So do you need to be a CPA to provide tax planning services? I think that's the essence of what Yvette was asking us.
Yeah, I mean, this is a short answer for me, and the answer is no. And the logic I use to say no is based on tax planning is crucial to the client. Okay, first we have to start that why are we doing tax planning? Well, because it's very important to the client to pay less money. Where I am trying to change the paradigm a little bit is to say, if you are a bookkeeper and the CPA is not doing tax planning, or the accountant or the tax accountant, the EA, whoever it is, doesn't have to be a CPA, right? Whoever's doing the tax return, if you're not doing the tax return, if they're not doing tax planning, I almost believe that you have a responsibility to do it despite of that. And the reason is because the financial accountant is in front of that client a lot more and is going to take the drumming of what happened on a tax return, in some cases, much more than the tax accountant will. The tax accountant gets to say, well, these are the financials. This is the way that it works. I think that through use of the Tax Planner Pro software, and then you combine that with the class that I have that comes with it. There's a 25 hours, if you can stand listening to me for 25 hours, I train you how to do tax planning like a CPA does. And the reason I can do that is because Tax Planner Pro has most of the logic inside of it to do most of the work that a CPA would do on a tax projection. And a bookkeeper really needs to be, or a financial accountant really needs to be present in the software in just some of the setup. And today, actually, I'm gonna show a feature that has really never been done before that almost takes some of the data entry, almost takes all the data entry away from Tax Planner Pro completely, to where all you have to do is say, I want to set this up for my client, and it does it. The biggest thing you'll have to do is make sure that the financials are right, and you are an expert in making sure that the financials are right. Everything else Tax Planner Pro will do for you. But the bottom line is, I think we have a responsibility as professionals that if somebody else isn't doing it, and maybe we've raised our hand to the tax accountant and said, hey, I've got this software. Should we work together and set this up and see if we can help these clients through this tax process? And let's say that tax accountant blows you off or says no thanks or any of that. I think we have a responsibility to do it. Now, what I hear back from accountants a lot, financial accountants a lot, is, these tax accountants are the ones that send me the clients. I don't want to go rocking any boats. I always go back to, I don't think it's rocking a boat if you serve clients well.
Mm-hmm.
I think clients will reward you for good value. And I think if you get into a situation where a CPA or a tax accountant starts to penalize you for trying to help the client in a situation where you allowed them to be, I think if you, and I say this in the course, I kind of go through all of this, where I say, reach out to the accountant and say, I'll work in the background of this. Let's just make some money together off tax planning. I know how to do it, because that's what part of the course is too. If they say no, you got to go out and do it.
By the way, Adam says class is awesome. Adam Saivak, he's in the
that's very kind of him. Thank you, Adam. Yeah, I get that. Definitely everybody who goes through the class, probably 75% of the people at least, send me some kind of note that says this rocks. And part of it's because they get to learn tax planning, but part of it's because I go through my whole marketing scheme and how I get clients at Ragain Financial, that kind of thing. And they really like that too, because it's kind of an open, honest conversation about what works and what doesn't, and how selling is hard.
Okay, so we're coming up on just about 8:30, so I want to get to the good part here. This might be a good time for you to share your screen.
But yeah.
And and then you can take us through the tax planning process and how Tax Planner Pro helps.
I'm going to pull up, let's see here. Which screen do I want? I think I want this screen. I have 3, so I'm trying to figure out which screen I want to be on.
Gotcha.
So you guys see that?
Looks like it's coming up. I see the sort of X check mark. Yep, and now I see Tax Planner Pro.
So I'll be brief. What I'm doing is I'm signing into Tax Planner Pro and going to show you first the accountant portal. So Tax Planner Pro has 2 sides to it. It has an accountant portal that only the accountant has access to, and then it has a client portal that all of your clients get access to for themselves. So inside the accountant portal, you get this is kind of a test list, but you get a list of different clients here. And if I click on any one of them, I'll go into Chris Ragain here real quick. It brings me up with some accountant tools and some things that I need to set up this particular client. So as I'm setting them up, I can choose whether I want QuickBooks Online. Here's something that's important to mention. This syncs with QuickBooks Desktop. Meaning if you're on QuickBooks Desktop, or let's say you've got clients all over the place that all have their own QuickBooks Desktop, you can still have each one of them individually sync to their QuickBooks Desktop to Tax Planner Pro, and it will automatically pull their financial information each month to update their tax projection. So that's handy, right? I mean, it's one of those things where you go, yeah, I can now have access to financial information from my client without having to log in with like go to meeting or go to my PC or anything like that, because this will pull the information, which I'll show you here in a second. There's other pieces to this screen where it's mostly data entry where you're setting up the client. So let's see this button right here. Let's ghost into the client side. And I'll show you what the client gets to see. And then I'll show you some of the cool features. Most of the features are on the client side because we want the clients interactive with us in tax planning, right? We want them to see their tax projections. And so the dashboard here is showing a few different things. First, there's some graphs along the top that has different information about their business and their tax situation. Down below here, as I scroll, you've got the business summary and you've got the personal summary. See, tax planning is all about 2 tax projections when you're talking about business owners. It's about the business projection and the personal tax projection. Well, your client, every time you do bookkeeping, every time you finish a month worth of bookkeeping, you can set up Tax Planner Pro to where it automatically goes and looks at what you changed. And it will update the projection for the new bookkeeping. This means that as time goes by, your projection gets more and more accurate, and your client gets to see all of the changes that are happening and sees all that work that you're doing and how it's updating in the software. Then over here, they get an idea of what they're going to owe or what they're going to get back in tax money. Now, some statistics that are interesting. I use QBO for all of my clients, and all of my clients are set up on Tax Planner Pro. On average, my clients log into QBO every 19 days on average.
Huh.
On average, my clients log into Tax Planner Pro every 8 days. So they're actually logging into Tax Planner Pro twice as much. In fact, 30% of my clients, like 32% of my clients, log into Tax Planner Pro every 48 hours. Now, what's odd about that, they don't know this, Tax Planner Pro only updates every week at the earliest. So when they log in every 48 hours, some of them, they're looking at the same data they looked at 48 hours ago.
But you know what? Let me stop you there for a second, because I think this is an important point to hone in on, because it actually, to me, makes a lot of sense. Because, you know, it goes back to when I started doing cash flow projections for clients. And it was because my wife said to me, Seth, all these clients that come in your door, they have such a mess on their hands. Like, how do they let it get to this point? And I said to her, because they're not accountants. They're not bookkeepers. They're really good at selling widgets or doing whatever it is that they do. And so they don't know how to do this stuff, let alone that they should do it. And I think what you're speaking to in terms of these statistics gives us some very telling information that this is what they want. When they log into their accounting software, they'd love to see this, but since they don't, they look, and I think a lot of them, perhaps on some levels, have too much pride to admit that they're overwhelmed by what they're seeing when they log into accounting software. You know, maybe they don't, you know, they feel silly telling us, hey, I don't understand what I'm looking at. Meanwhile, we can, you know, almost make the assumption that they don't really fully understand it, and that goes back to, you know, my process that I described. When I go through that with them, that also helps them, A, realize they can, you know, ask the questions, and B, we can get at what they really want, which is this kind of, you know, sort of summary level information. That's what they want. They want a way to sort of take their business's temperature and say, how am I doing? And as accounting professionals, we'd say, well, look at the balance sheet and look at the profit and loss and learn how to read that. But as a business owner who doesn't have an accounting background, this is much more like it.
And you've encapsulated perfectly the point I wanted to make about this is a summary for your clients, not just a tax planning software. And they look at, the reason they're logging in so often is because this is something they can understand. And Seth described it very well, and I couldn't agree more. Over on the left here, they get to see everything projected. This isn't their current financials, okay? This is projected to what it'll be at the end of the year. Watch when I hit this edit button here. Now, if they want to see what their current financials are, they're right here. This is what was in QuickBooks as of 5/13. It will update again this Saturday. So on 5/21, it'll update again. But they can see that.
How is that projection calculated? Is it just kind of based on the average? Are we taking, you know, 5/12 times, you know, times the difference to get to the year, or how are you sort of prorating what the rest of the year looks like?
This is not the best way to do projections for some clients, but I've got a little add-on here. To answer your question, it is annualizing these based on 365-day year. So it's taking how much time has passed in this update and basically annualizing it out to the end of the year.
Is it doing a rolling average, or is it just if half a year is 14,000, the whole year is going to be 28?
Yeah, it's just a flat amount. But let me add something here. Coming out, because I've got my little list here of time frames of when I'm releasing new stuff, which I'm not going to put on the screen because it's secret. But it's supposed to release the week of June 6th is what we call the 12-month rolling average. And what this is going to do is it's actually going to take this date and it's going to pull the last 12 months on a rolling time frame to where we're using part of last year's data and part of this year's data to look at actual 12 months. And it'll be much better for seasonal type of businesses. And then what I'm going to add to it eventually is once I have that 12-month, what I can do is I can say, okay, look at January through May 13th of 2015, then look at January through May 13th of 2016. What was the delta of that time frame, and apply it to the past as well. And we can get this really dynamic tax projection that is based on how your business is moving. But for now, this is just a straight annualization. Over here in the far right column, however, you can override anything you want.
Right.
So if you've got something that is, let's go down to insurance, maybe insurance was paid once and that's going to be it for the rest of the year. You can go in here and just drop it at the amount you want this to be for the projection, and it's done. You can also go down to the bottom, and let's say your business owner only owns 50%. You can change their ownership to 50% here, to where it only sends them half of the taxable income.
Got it. Got it. And for those of you who are like me, who want to sort of test everything at home, if you go back up, Chris, to the top real quick, because one person commented that the projections look high. I just did a quick pro quo because I was curious. If you take, so we're looking at as of 5/13. So just keeping it simple, 5 divided by 12 is a little less than 42% of the year. And if you divide the 14,105 by the 41.67%, you get 33,852. So we're in the ballpark. And Chris, I think you did say it's based on 360 days.
It is. It's daily. It's not monthly. So it's perfectly daily.
Yeah. So my quick pro quo tells me it's right in the ballpark of what you're saying. So it's, the projections aren't high if you actually, look closely at the numbers.
Thhere's something else that's interesting. So you see I have a meals and entertainment line item right here, right?
Mm-hmm.
What Tax Planner Pro is doing is it's looking through all of these different accounts, and when it recognizes something that's called either meals or entertainment. So if you have 100% meals and entertainment, don't name it meals and entertainment. Name it something else. But when it sees meals and entertainment, watch what it does. See right here for the projected amount, it's $23.58 for the year. When I scroll all the way to the bottom, notice how total deductions is more than allowable deductions.
Right.
That's because Tax Planner Pro is making the adjustment, the tax adjustment, not based on how it was coded in QuickBooks, but it's reading the data.
Right. It's taking 50% of that because that's what you're allowed.
That's right.
So so now we're getting a question. What if the taxpayer has two companies at 50% each? I assume you look at just one company at a time, so that you can't look at it by taxpayer. You have to look at it by company.
Well, so there's a couple of things that we're coming out with, and I'll look back here on my schedule. So on the week of July 4th, we're coming out with being able to sync multiple companies to one Tax Planner Pro account. So the Tax Planner Pro account follows the business owner. And what you're going to be able to do, it's starting in July, is you're going to be able to sync multiple QuickBooks files to this one user. Now, what I can tell you is that we're the first company that will have really ever done this for one user, because it's extremely complicated from a QBO perspective. Because what you have to do is you have to set up different tracking IDs for each of these companies, and typically QBO doesn't necessarily want you syncing multiple QBO files to one login, because that's kind of how they track who's syncing to apps, things like that. So it's a complicated thing. But what's going to happen is across the top here, right under business tax projection, because we've already wireframed it out, you'll have company A, company B, company C, company D, company E, and you'll be able to see this for each one of them, set the ownership for each one of them, set what kind of business they are, whether they're an S-Corp, sole prop, partnership, and it will do all the calculations to create a consolidated projection for you. We're also, right after that, going to create a scenario where, let's say you've got one owner that owns half and the owner B owns the other half, to where one QuickBooks company can actually be attached to two Tax Planner Pro systems. So I have huge need of that in my business. And so you can be guaranteed I'm going to make it work, because probably half of my business owners all own multiple businesses.
I have a question. One thing I'm a little confused on is, if you're an accountant, could you be offering the service without the client having a subscription? I mean, for example, if you were to go in on Zoom and get his or her, QBO logins and sync the file, and then were to do a Zoom meeting with your panel showing what things are, do they necessarily have to buy a subscription in order for this to work, or can you do it as an accountant?
So as an accountant, the subscription is sold to you. Mm-hmm. And you get a certain number of clients depending on what subscription you purchase. Mm-hmm. And you do not have to invite the client in any way. Okay. If your QBO files or Zero files are linked to you as the accountant, when you go in here, let me just show you what happens here. How are we doing on time, Seth? Are we okay?
Yeah, we're good.
If I come into, if I'm going to disconnect from QuickBooks here real quick and kind of show you what happens. So if I go in and I want to sync QuickBooks back here, and I'm an accountant, right? When I go to connect QuickBooks, it's bringing up this login here, and I sign in, it's going to give me all of my clients as options. So I can select which client I want. And I don't ever, as long as I'm the accountant for a client, I never have to even use the client's login. I'm using my accountant login, which is the same for every single client I've got.
Right. This assumes you're using QBO-A, where you actually have the portal that gives you access to all the clients who have added you as the accountant user. So let's make sure people understand that.
Yeah.
If the client just adds you as a regular user, they're not going to show up in your QBO-A, which means they're not going to show up here.
And that's right. You need to be on the new portal or have that new functionality.
Yep.
And so here I can just pick, Dennis, I can just pick which one I'm actually wanting to sync here. The client never knows until I invite them. Now, where I invite the client is back in the accountant portal here. See where this is client credentials? If I want, this can be blank. So I never have to invite a client, and I can just do all of this work in the background and provide them information about their tax projection. They would not even know that I was using Tax Planner.
Or you could just basically do a Zoom meeting like now and just sort of share your screen and show them what you're doing, right?
Oh, sure. Yeah. I mean, you could bring this up in a Zoom meeting, right? And I've never connected back, so it hasn't brought my business summary back here. But I could show them all of this and do a meeting, and it'd be great.
Now, this gets us into some of the questions that are being asked in the chat and in the Q&A. So a couple people are asking about the capability of printing reports out of here, and if it were me, I'd be asking specifically, can I get a PDF of this and send it to the client?
June 20th, the week of June 20th, the summary report comes out.
Beautiful. And so a couple people were asking about the reports and printables. So I just
let me show you one thing that's kind of interesting about. Let me go back into the sync settings here, and I'm just going to connect to QuickBooks here again. But it creates an. Let me see if I can find a company that's in my little dummy file here.
And while you're doing that, Alexa's asking, this requires that they share their personal information with you. For most of my clients, I'm just working on their business books, thoughts about how to bring them on board and how to price. So I'll address this for a second, Chris, and then I'll give it over to you while you're doing this. I, in many cases, because I want to, add that value to the client that comes with being able to address the entire picture with them, I will frequently have them give me access to their personal stuff, and I will keep a personal set of books, just like Chris does the personal returns along with the business. When I'm handling the business finances for somebody, I usually will ask them to give me access to their personal, and I'll set it up in a separate QuickBooks Online company. So I'll have, Client X business and then a separate company for Client X personal. Unless they're sole proprietor, then obviously it's all combined, and I'll just structure the P&L to segregate the business, which is the Schedule C stuff, versus the personal within the profit and loss. Just in the chart of accounts, I'll structure that. But normally, I'm working with clients that have legal entities, so I have a separate company for each. And this way, I actually keep a set of personal books for them. And there's a couple of reasons for this. Number one is, this right here, so that I can do the analysis and give them the whole picture. But also, we all know this because we've all dealt with this. A lot of our clients will unwittingly put business-related expenses through a personal account somehow. So that gives me the ability to pick up on those things and journal it into the business and just debit the expense and credit the owner contribution or shareholder contribution into the business because they paid for something personally. So it gives me that opportunity to help them pick up extra deductions that otherwise would have been missed if I wasn't paying attention to their personal stuff.
And you know what we're doing right now? As you say all of that, it's beautiful. We're reinforcing why bookkeeping is so important to tax planning. I mean, think about everything that Seth just said, how important it is that the financial accountant knows how to present these financials correctly. Because without good financials, nothing else matters. I can do a tax projection in some ways without certain personal information, but I can't do a good tax projection without good financial information. I wanted to bring a picture up this is an email. So we're talking about reports, and reports are coming, but this email is available now. And if you decide to set your client up in Tax Planner Pro, each month it's going to send your client, if you select, see this summary email section right here, you can put it to never. So don't worry, there's an option where it doesn't email your client. But if you want them to get this monthly or quarterly, see how you got two options here, monthly or quarterly, they get sent this tax projection. What's doing, it's comparing last month's tax projection to this month's tax projection. In this example, it didn't change too much, but if the tax projection went up, if the tax increased, it says, "Aw shucks." If the tax went down, which is good, it says, "Good job." And so you can send them some communications. And coming in July, we're going to start giving the option of getting rid of this logo, and we're going to start putting in your logo. In that same time frame, we're going to start getting rid of this logo here in the portal and start putting your accountant logo in. So we're going to basically white label the whole thing for your logo, so that this is your portal and something that you can use, and Tax Planner Pro can just kind of be in the background of things.
And I want to add something to this real quick, because this is so cool. I just had a conversation with somebody yesterday. We're talking about, I'm going to onboard one of his clients, for the financial accounting stuff. He's kind of a financial planning person for businesses. And we had this conversation. He says they haven't set aside any money for taxes. This is the whole problem. And I know most of my clients are like that. They always get into that panic mode around, all right, so here's the typical scenario. They file the extension because the books aren't ready yet, right? Not my clients, but, the clients coming in. And then we get to September, and, when the corporate extensions are due, and they haven't set aside any money, and now all of a sudden we do the return, and here's what you owe, and everybody's in a state of panic. Where am I going to get the money from to pay all the taxes? So with a process like this in place, where they're getting that monthly update, because I discussed this with my colleague yesterday, who's going to refer this client to me, that, okay, normally I try and get them to set aside 20% of all the revenue that comes in, unless that's too much of a strain on their cash flow, then we figure out how close we can come. And he says he usually likes to have them do, around like somewhere between 10 and 15% if possible. And he says, but we also have to catch up because they haven't put anything aside yet this year. So I love this, because this every month tells us, here's what we're going to put aside, right?
Yeah, that's exactly right. And there's no more, because if this goes out every month, it goes out every month to my clients. There's no more, well, I wish I would have known.
Right.
I wish somebody would have told me. I'm like, I told you 12 times what this is going to be.
Do you ever
there's no more excuses.
Do you ever get pushback on, say, I don't want it monthly, but it'd be nice to have this quarterly? I mean, is that something?
Oh, yeah, I just here, sorry. Wrong button. So the options are monthly, or quarterly. So you can do it anytime you want, and you can delay it, because delaying, bookkeeping doesn't happen in a perfect vacuum on January 1 or May 1, right? So if you want to delay to give yourself time basically to do the bookkeeping, you can delay this for up to 45 days. After the close of the month that it's doing the workforce. So it gives you plenty of time to do that after the fact bookkeeping if you want to. Let me, because we're doing good on time, but let me show you the new feature before we run out of time. The feature that really has never been done before, at least I don't know that it has, and it's going to be really exciting. And what I have, I'm bringing it up now, and ignore the way that this looks. This is basically what we do whenever we're trying to put together some HTML. But what you're looking at is a new feature that's going to come out here in about a week called the Vault. Now, the Vault is exactly what it sounds like. It is a document portal. So it is a place that you can store tax returns, and your clients can view them as well. And this was something that I very much needed, because my clients obviously are going into Tax Planner Pro more than they're going into anything else. And I don't like portals very much, because I think clients always forget the logins. They're not in there very often, that kind of thing. So you can now drag and drop files into here. You can select the files to upload, or you can upload them from Dropbox. That's cool. That's been done a lot of times. Here's what's never been done. Each time you drop a tax return in here, see how there's a Tax Planner Pro icon next to each of them? Well, let's say I don't do the tax returns for my client. but I got a copy of the 1040, a PDF of the 1040, and I went ahead and put it on the vault here, or maybe the tax accountant put it on here. All I have to do is click this button right here. Tax Planner Pro will go in and read the PDF. It will read it. That's what we've been working on. We've been working on this for almost as long as I've been working on Tax Planner Pro. We will read it, and it will drop the 2015 information into the personal projection for you.
Nice.
So that's why I say once you sync QuickBooks Online and then put their PDF in the vault and import that, there's no data entry left.
It's a smart scan. It's like Expensify for tax planning.
That's right. And the reason I say I don't think anybody's ever done it, I don't know. We searched and searched for someone who had already cracked the code on scanning 1040 tax returns. Right. And there's from banks to tax software. Tax software knows how to scan things like W-2s and stuff like that, but we never really found anybody that was scanning a tax document. And if you think about the applicability of this, it is great because now if you're worried that you're not sure how to set up their personal tax return, well, 95% of my tax projections for the personal tax return side, I'm using last year's tax numbers. So by being able to import the 1040 and not have to do any of the data entry myself, I've made this very simple to set up. And if we're really getting into what this is going to be, we're going to have integrations with ShareFile and SmartVault. We're going to use this as a way to really start to interact with some of the file sharing tools to where later we can do these bulk imports where we say, okay, I'm going to send you all of my PDFs or give you access to my drive, and I just want you to do it for everybody that I've got. I'm going to tell you something. Eventually, Tax Planner Pro is going to be smart enough to do a tax return, right? I mean, it already is having to learn how to do many different things. At some point, being able to scan everything that you've got for taxes into a system like this to where it can do a mock tax return for you, for instance. I'm not saying it necessarily needs to replace tax software, but what if you wanted to see what a tax return is going to look like on December 31st? This could probably create it for you. All we have to do is create that functionality because it knows all the calculations and everything else. So this is a big step for us, and it's been a lot of hard work, but it's going to be released here at some point next week, and there is not an extra charge for this. It is just embedded in the software for anybody to use as much as they want.
Awesome. All right, we've got some other questions. I want to make sure we get to them because we are running a little short on time now. So one question from Skylar, which I think is a great question. Going back to the projections, does it take any estimated payments that they've already made into consideration when it estimates how much how much the projection went up or down?
Yeah. So in the personal data entry, so let me show you here. See this edit button right here? This is where you can go in and edit the personal information, and you won't have to do this quite as much when you import things, but right here you can enter anything you want to, and down here at the bottom, right here at the bottom, if you guys can see this, it's the estimated tax payments. So if I go in here and I say, so far this year they've made $15,000 worth of estimated tax payments, right? Beautiful. And I'm going to go back up here and hit calculate again. Well, now it's going to factor that in to what the taxes.
Okay, so the answer is yes, but you have to put the information in. I'm sorry, I'm just going to move a little fast here because I want to cover, there's some good questions in here. The emails that go out, does it show that it comes from me, or does it show that in other words, what do the email headers show? Is it from me or is it from Tax Planner Pro?
It's from Tax Planner Pro. That change is going to be part of whenever we white label it, we'll have it come from you guys. But right now it comes from welcome@Tax Planner Pro or support@taxplannerpro.com.
Okay, and so then Barbara's asking, can we speak briefly on how to use Tax Planner Pro for the 1040 client with no Schedule C? I'm guessing this really isn't built for them, or could it be used for them?
It's not. I mean, it could be used for them because you can set it up where there's no business and just run the person, like what you're looking at right here is a personal tax projection. So you could run it and see how the planning module's right here. The planning module in the simulator, we didn't get into too much. Planning module is suggesting strategies that this taxpayer is not utilizing. And the simulator is where you can get in and run different what-if scenarios with their information. But you could build just a 1040 projection in here or have the 1040 scan in, and the system will build it for you. And then pick and choose what you want to use from it. But technically, this system is mostly for business owners. So we're going to come out with a functionality that is just for individuals, but I'm not going to mention it because it is not on our roadmap for even this year. It's probably a next year feature. Gotcha.
Okay. I think we have a couple more questions here. Alexa, who asked earlier, that we addressed on the, I forgot what the exact question was. About onboarding and getting the client's personal information so you can get that whole picture in there. Also talked about how to price it for the client. So I'm going to answer very briefly on that. What I always say when it comes to apps and add-ons that I use with my financial accounting service is I bundle the cost into my monthly fee so the client doesn't feel it. Chris, I don't even know what the pricing is on this, so maybe this is a good time for you to speak briefly on what the cost is. I think somebody else asked I guess there's 2 different plans you offer at 2 different prices, so they want to know what the difference is. So let's quickly talk about the pricing, what the difference is, and then you can start thinking in terms of how you'd build that into your monthly fee.
So I'm on the Tax Planner Pro website now, and I've gone to the accountant page, which I did awfully quickly, but trust me, on the home page, you can come to this accountant page, and it talks about what you're offered for accountants. But if you scroll all the way down to the bottom, here are our 2 plans. So the mini plan is $39 a month. You get 10 clients with that, plus the tax planning mastery course. The RTP designee, you get up to 150 clients. So this is, a lot. Plus you also get the opportunity to, after you take my course, take the registered tax planner exam. You can then use the registered tax planner credential and also use this registered tax planner logo on your website, that kind of thing. And it also gives you access to priority chats and some events and things that we do for our RTP group. But to get started, you can start on this mini plan here, and you get 10 clients with it.
Gotcha. All right, now we're going to get to some of the really important questions. One guy wants to know what your high school mascot was.
Yep, it was the Laker. So we are the Camdenton Lakers.
Okay, mine was Cougar. We were the Comac Cougar.
We lived on a big lake, so I guess it made sense that we were the Lakers. But other than that, it's how it is.
Okay, so the next one is this suitable for business owners to set up and maintain with their own or on their own or with a CPA? I think we answered that you could do it either way. And I think you brought up earlier, Chris, that some people get into the issue of, I don't want to step on my tax professional's toes, so to speak. I think what I would probably be inclined to do if I wanted to introduce this, and I knew, first of all, I always try to have a close working relationship with the tax preparer for any of my clients, right? That just makes sense. So that if I was inclined to want to bring Tax Planner Pro into the mix, I'd probably have the conversation with the tax professional, and I can't imagine they would have a problem with it, right? So I would have that conversation with them before bringing it in. I'm sure they're going to say yes, but at least this way they don't feel like they were, usurped somehow.
Yes.
Is this worth building up a bookkeeping practice at this point with the industry changing? Should we focus? Is it worth building up a bookkeeping practice at this point with the industry changing? Should we focus elsewhere? I think probably the way I would answer that question is, yes, of course it's worth building a bookkeeping practice, but I think when you're trying to consider the way that the changes are happening is that you have to consider that it's, even the same, it's the same answer for an existing bookkeeping business in terms of where you're going. We're not going to be just entering data anymore. Our role is going to change to, a more tech kind of role where we're bringing in the apps that work with QuickBooks Online, let's say, and we're going to be telling people, we're going to be giving people more strategic advice like what Tax Planner Pro can offer, right? Because there's, let's face it, when I get one of my clients set up in my business management program, by the time the onboarding is complete, so much of the process is automated. The bookkeeping process is almost completely automated. The only thing that's left to do is we babysit the bank feeds once a week, maybe, to make sure that things are coded in the right place. And then we do that balance sheet review I described earlier, so that there's much more time left over in terms of the time I would typically allot to, in terms of what I'd spend on a client, to do this kind of analysis and provide them with that strategic guidance. So, Chris, you have anything on that?
The only thing I would add is make sure you're going after your niche businesses, because with apps and everything else that needs to be learned, you have to specialize in something, because it's impossible now to know how to do everything construction-wise. I know Seth does a lot of real estate. I do a lot of medical doctors and things like that. I couldn't do all of them. So you need to pick a niche that you know you can master, and then try and go nationwide with it.
Yep. I tell people pick three. Pick three areas that you want to specialize in and stick with those. And Coral makes a great point here in the chat, is that we need to educate the client that we're not the stereotypical bookkeeper. We're not the bookkeeper the way you think of a bookkeeper in the traditional sense, because we're able to provide so much more now than we ever used to or we ever expected to.
That's exactly right. And what we talked about at the beginning was this whole paradigm change is in the financial accountant's world. That's really what's changing a lot. And we have to start elevating the profession and what clients see it in their eyes as a professional that is on the same level as all these other professionals. If you want to know something that just gets my goat, I can't stand hearing that tax accountants get $250 an hour, but bookkeeping gets $65 to $80 an hour, or $45 an hour. Or if you're one of those bookkeepers that's charging $15 or $20 an hour, stop and come work for me, because I'll pay you that and I'll bill $80 an hour.
Right.
But we need to start saying, hey, we are worth $200 an hour. Now, I'm not going to charge you $200 an hour. I'm going to charge you $200 a month. You want to know why? Because this is going to take me 15 minutes a month. I'm not going to tell you that.
Right.
But I'm going to value bill this thing, but we've got to start billing and seeing ourselves as the assets that we are.
Yep. In fact, while we're here, Chris, why don't you turn off the screen share? This way we can see you again.
Oh, yeah.
And we have a few more questions. We're actually 2 minutes over, but I'm going to go on a couple more minutes because there are some really important questions here. Like this next one, Mike Jasoshek wants to know if you're a Minnesota Vikings fan.
Well, I'm at my Minnesota house, and I am a Vikings fan, but usually only for the first two games. After that, I usually get disappointed in some way. Now, my wife is from Minnesota, and funny enough, she almost just hates them because she's disappointed all the time from them. But we go to a couple of games while we're up here, so I would say yes. Okay,
Deborah wants to know, who is John Galt? I don't even know what that means.
John Galt.
I don't know. We can come back to that one or answer it online later.
That's from the Fountainhead. That's the Anne Rind.
How do we get easy manual entry? I think we'll skip that for now. Do brick and mortar offices matter anymore? Is leasing office space in a big building, in a big office building, better? I think this depends on what approach you want to take towards your business. I don't think there's any right or wrong answer here. My thing is I love doing everything remotely. I love the fact that I can do what I do from anywhere. I recently linked to a really interesting article on LinkedIn about this, where there are now companies sprouting up. I think this is fascinating, where you can pay, it's like the equivalent of what you'd pay if you were paying office rent, but they fly you around different places in the world, and they'll take you to those cooperative office spaces. So you can work in Paris for a week and then go to Germany and work at some coffee shop in Germany for a week. So you have to have your own business that you can do remotely. But I think it's so cool that they give you this opportunity to do what you do from literally all over the world. That to me is just the coolest thing ever, and really indicative of the times and where we're headed with what we can do.
My office is in Florida, and I'm talking to you from Minnesota. I spend about 6 months a year in Minnesota. So I am remote from my office and from my clients. So I would never say that it is necessarily needed. I can tell you the reason that I do have an office is much less because of the accounting practice. My accounting clients are never in the office. It's much more because of my financial planning and investment clients. They require a brick and mortar place because they want to know where their $2 million lives, basically, and it can't be out of my house. So it's much more for that.
And this next question, this might be a bigger conversation that we don't have time for today, but is there a formula available to compute earnings portion of IRA when a regular IRA was used but never deductible? That's above my pay grade for sure.
Yeah, it would be part of a longer conversation. There probably is a formula to use, and I don't know if anybody's made a free website or a calculator. I'd almost think somebody might have made a calculator for something like that, but I don't know of one. It's not a situation I run into a whole lot.
It seems like you'd have to come up with a pretty broad assumption about how much the invested funds are going to earn, which would have to be based on what the market's doing.
You'd have to be using real numbers. You'd have to have statements of the investment there to where you can know what your earnings were and what you're going to have to back out, or what was. I think if you don't back it out, there's an excise tax that goes against it, that kind of stuff.
Right. All right. Next, I like this question, and we'll spend another minute, and then we got to wrap up. But what is the most creative tax planning idea you have heard from a small business owner?
Captive insurance.
Okay. Explain that.
So captive insurance is the Mitt Romney deduction. And it is where you set up an insurance company to insure your business against things like terrorism and other ailments that are never going to happen to your business. Your business pays premiums to your insurance company. And so long as the insurance company makes less than $1 million, none of its earnings are taxable, yet your business gets to take a deduction. You can then set up as many $1 million insurance companies as you want to where you can essentially write off $100 million a year if you want to your insurance companies. And after the regulators decide that the risk that the insurance was insuring you for has passed, you can distribute those that amount that's in the insurance company to your heirs while avoiding estate tax.
Nice.
So if you want to live large, that's what you do.
Nice. All right, Myrna asked, what does ZIBWAM stand for? It stands for Zoom In Between Wall and Main. Our whole concept here is between Wall and Main, Wall Street level financial advice for Main Street small business, understanding what's happening on Wall Street and how that impacts us here on Main Street. That's kind of the premise that I've been operating from since really about the end of last year, but definitely officially as of the beginning of this year. And we are launching the website. My goal now is to have it launched the first Saturday in June will be the first launch day where we'll have all the contributors with their sort of introductory posts, and then the following Monday we'll start the actual release of the real content. And I'm going to grow it to a point where we have 50 contributors, each posting one per week. So we'll have 5 in the morning edition, 5 in the evening edition every day, Monday through Friday. And there's going to be no noise. What drives me crazy is, in fact, just recently, it was driving me crazy again. I clicked over to read a blog article, and within 2 minutes, less than 60 seconds of reading, a pop-up appears. Hey, sign up for our list. And I'm like, F you, get out of my way. And I actually just clicked away because I clicked that off and then something else came up and I said, you know what, I'm done. It's not that important. I have other things to do. So we're not going to have any of that noise on this website. You're going to actually be able to enjoy interruption-free content consumption. That's my goal. I have other ways to generate revenue from this. So that's what Zoom In Between Wall and Main is all about.
I am on Between Wall and Main on Facebook every day, usually about 7 to 10 times a day. So if you're ever trying to get a hold of me where you're wanting to ask a question, just call me out on Between Wall and Main, and I will answer it. I'm on there probably at least once an hour during my day.
I love that. I love that. And yeah, and so we're going to be bringing, once we launch, we're going to be bringing a lot more of the Wall Street side of things into the mix here. Any plans to expand the community of TPP users beyond Facebook, perhaps a collaboration forum for tax professionals?
I get that question some from the people that are in our forum. So we have a forum. If you are a paid user of Tax Planner Pro, we have a private Facebook forum that's just for those users. And one of the reasons I'm hesitant is because I use Between Wall and Main so much as my public forum. So if we're going to talk about tax planning, let's talk about it there. Right. And let's have a bigger conversation because it's free. You don't have to register for anything to be in there. So it just made sense to make one that is closed just for users so that we don't fill up Between Wall and Main with stuff that people don't want to hear about. But I would much rather be the public forum that I'm already on than creating more public forums. But I don't know if somebody else wants to do it. Maybe it's a good idea.
Gotcha. And that reminds me, earlier I thought of this and then I didn't want to interrupt, so I lost sight of it. But one interesting integration that you might look at, and this could be an offline conversation, is QVinci. Because if QVinci is consolidating financials from multiple companies and that can be pulled into Tax Planner Pro, that could really provide some interesting information for somebody who needs to see.
I know the guys over at QVinci, actually.
Yeah, me too.
That's an interesting idea, one that I'll have to kick around. I met them back in my LedgerSync days, and got to know what they were doing, and they've really come on the scene here in the last year or so. And
their updates, I recently did, it was the last course I did for School of Bookkeeping, now called the Studemy. It was the last course I had contracted to produce there, and it's just been released recently on there, so you can actually learn. And some of the changes that actually the reason that we held out for so long was they were making all these changes to the product. They finally made them, and I think you'll find, those of you who are watching, if you check out those videos on QVinci, it's a really, really cool product. In fact, anybody who's got a franchise, I'm now looking at the franchise, the corporate franchise owners, not the franchisees, but the franchisors. They need to be using QVinci because a lot of them are using a product called ZIBWAM, which has been like the premier product for consolidating all of it. But QVinci is so much better. It does it so much cleaner. So I'm going to, like, I have a few franchises where I've worked with the franchisors to standardize their charts of accounts and things. Now I'm going to go to them and say, you know what? We don't need to standardize jack because it's all can be.
You can set it all up. Well, another one that's in the same vein that is also one of the softwares that you have mentioned and written about is Finagraph.
Yes.
So Finagraph has an interesting opportunity when you talk about multiple businesses and things like that too. And they've just recently become totally free. So it's an interesting idea. It's almost like an open code now because anybody can use it.
Yep. Jordan asked, what is the airspeed velocity of an unladen swallow? We need to know. African, or what's the other one?
I think the other one is the Portuguese swallow. And whenever we're talking about airspeeds of swallows, you need to start first with a set of variables like what is wind speed, what is weather like,
and are they carrying the two coconuts? If they're carrying coconuts,
I don't want that answer to live on forever. So I'm going to I'll get back to you.
Just Google it because the answer's on Google.
Yeah.
There's a great site actually called Let Me Google That For You, where if you use that, you put in the Google search, it will generate a link that you can send them. And then when they click on the link, it'll actually put the search in Google for them and then produce the result. It's hysterical. Like, so when you get asked those questions where you're like, you realize you could have just Googled that. It's literally called LMGTFY. Let me Google that for you. LMGTFY.com. I think that covers all the questions we have. So, Chris, how do we reach you if we want to follow up questions or if we need more information or we just need to get signed up?
TaxPlannerPro.com is how you get signed up. You can follow me mostly on Facebook. I do have a Twitter handle, which is at CRaganTPP CRaganTPP. But to be honest, Twitter is a little bit beyond me. I can't keep up with it very well. Facebook is where I am mostly at. So you can find me on Facebook. I'm Chris.Ragain14 on Facebook, and you can find me between Wall and Main, of course, and at TaxPlannerPro.com.
Great. And you know what? Since you brought it up, next week we're going to do a ZIBWAM on Twitter. We're going to talk about Twitter the whole time. Actually, we'll just make it a social media strategy for accountants kind of webinar. That's what we'll do next Friday because I don't have a speaker lined up yet. So
I can't keep up with it. It's so hard.
I'm going to show you how you can. I'm going to show you how you can make it easy.
I need to watch this.
We're going to talk about, we'll make it social selling for accountants and bookkeepers. And then this way we'll talk about how to use the apps that are out there. And I think especially I want to talk about Nimble CRM, which is
I know that one.
Really, really, really cool. It's faster than an African swallow without the coconuts. All right, folks. Sorry I went over time, but I thought it was important stuff, and I didn't want to leave it out. So maybe I should just extend this to an hour and 15 minutes from now on. But anyway, then it'll end up going for an hour and a half. So we'll leave it. Thanks, Chris, once again for joining us. Everyone, if you're wondering, the recording for this will be up hopefully by this time tomorrow, Saturday. We'll see you then after my hike. Take care.
Bye.